Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and US economy space. And as you guys can tell from today's title, we'll be going over Bitcoin outflows, that new Ethereum Shanghai Upgrade Date, as well as just some interesting tea hay and candle wicks that y'all might want to pay attention to. So if you guys enjoyed today's content, go ahead and drop a like below and subscribe. That way you can stay up to date with all of my most recent content. But we're going to go ahead and start today's video with something new, something you might not have seen on this channel, but probably something you've seen in your own analysis. It is that fear and greed index. Now, I'll go ahead and give a brief overview for some of y'all who haven't seen this before. Now, the fear and greed index, this is a nice little indicator for short-term pump and dumps, or not pump and dumps, like pumps and crashes. So whenever you see it flashing greed or towards the green, this is typically meaning that we are getting overextended. We are coming into a sell-off period, most likely. It means that investors are getting greedy and just throwing money at anything. And typically when that happens, it can be seen as a time to take profits or maybe sell some of your bag and wait. Now when it gets over here into the red and orange side, this would be known as the fear, obviously. And this is kind of how you can gauge when a local low is around for Bitcoin. So typically when a local low is happening, it means sellers are getting exhausted. They don't have much more to sell in that short term. So you could typically see it as a good time to possibly buy or add to your bag. Now that's not financial advice. That is just a possible way you could use this indicator. But let's go ahead and jump over to CBBI, because you can see here we've hit the 20s. We've actually shot into the 20s pretty easily, and you can just tell from the graph that over a week we went up about 10 points in that confidence factor. Just another reason why I think we are officially out of the bear market. We've entered that accumulation phase, that little kind of what people refer to as DeFi summer before the initial run up. So I do think it is a great time to start, possibly adding to your bags for long term, maybe taking some profits for your short term. But this is not financial advice, like I said. This is just all my own personal opinion and what I'm doing. Let's go ahead and jump into CoinMarketCap, because it does have some interesting data for us today. You can actually see here Bitcoin is only about a 1.4% drop on the last 24 hours, but you can actually see some of these altcoins are bleeding heavily, which is why you can see Bitcoin dominance is actually going up faster than the bull run in 2022, you could say. You can actually see it better on TradingView, which let me go ahead and take you to, because it actually says we are at 47.8% on TradingView. And as y'all can see, I drew these lines a while ago in one of my old videos, and it played out perfectly for that bull flag. I actually do think we went up higher than what my target was. Well, we're actually right at where that target is, so that is something cool, and congrats to me on. But why is this important, before giving me the pat on the back, is because you can see here Bitcoin starts to increase its dominance as we start to go into the bull run. And then whenever the bull run is ending and we enter into the altcoin season, Bitcoin starts to bleed, and we also start taking profits and putting it into altcoins. So this is why it's important to always pay close attention to Bitcoin dominance. Some people thought we would never hit 50% again. I'm not going to name their names, but it does look like that's approaching quickly. I personally think we will probably get back into that 50 to 60% range. I don't think we will go back to those highs we saw in 2021, but I definitely think that 60% is in the play. So you could also use Bitcoin dominance as a nice little indicator of when people are starting to move into alts, for possibly when you could take your own profits. But let's go ahead and use that as a nice switch into the first story of the day, and it's actually something interesting. I had to read this title twice. Digital asset outflows are actually dropping for the 6th week. Or, well, I guess, yeah, the outflows are increasing, but money going into the space is decreasing over the last 6 weeks. So, this is kind of interesting to me. I think it mainly has to do with the banks failing and a lot of that money leaving the space, because you can actually see, if you look at total market cap, over the last 6 weeks, we've not really had any outflows. I mean, we did dip for some time last week, but we made that up in 14 days. We made about $300 billion came into the space. So they didn't say where these outflows were actually coming from. Just based on my own analysis, I would assume with one of the largest crypto banks failing just for crypto innovation, that would most likely play into the factor. But as you can see, it has no effect on Bitcoin's price because we have gone from 19.4 to 28 over the last week and a half, 2 weeks. And they said it's evident that the sentiment is contrary relative to the rest of the crypto market. So they think it may be driven in part by the need for liquidity during the banking crisis. So kind of the same situation that we saw when that hit. People probably are just needing the money since, they can't access their bank account since it's locked. So I don't think this should have any concerns on the price for y'all. Just as y'all see, we have been surging. I think it has more to tell of people are actually using Bitcoin, what it's for, and the crypto industry of what it's for, of just banking yourself. Now that you need money and they're taking it out of their crypto accounts. So I thought that was pretty interesting, and I thought I'd want to highlight that for y'all. Let me go ahead and jump over to that second story of the day, and this is about the Ethereum Shanghai hard fork. So if y'all are pretty familiar with Ethereum, since December 2022, people have been able to stake their Ethereum to a node so they could become a validator. And whenever you had 32 Ethereum, you were officially a validator and you could approve and add blocks to that blockchain. So if you ever did become that validator, your ETH did become locked and you actually couldn't withdraw it until the Shanghai upgrade was officially completed. So we actually do now have that date, and as you can see here, it is April 12th is when it's officially coming out, which is when you can officially withdraw your staked ETH. So this had to do with it becoming proof of stake from that proof of work, just to become more green friendly, become faster, also hopefully lowering some of its fees. So this will be an interesting thing to pay attention to in the near future, because if you guys do remember, I did make a video roughly about a month and a half ago. I will comment it in the description below. The main price range for the Ethereum staked is around 4,000 to, or not 4,000, sorry, it's around $400 to $1,000. So you can definitely expect, with where Ethereum's price is right now, that these people will most likely sell their Ethereum that they've just seen go up and down through the course of the year. You have to remember, these people started staking their Ethereum right around here. And they could have obtained and, got their bags a little heavier in this area. So these people have just watched their Ethereum pump all the way up to $4,800, not being able to take a cent of profit. And then they've also seen it crash all the way down to $800, $900. And then also in that time span, double its value. And then crash back down $800. So you can definitely assume that there would be some selling pressure once that staked ETH does get released in that Shanghai upgrade. So I'll definitely keep updating y'all on this as we get closer to the date, because they have moved it in the past. People originally did think October, which is why they originally had so many people stake. But let me go ahead and jump over to around the Twitter sphere. We don't only have one tweet for me to show y'all today, but I do think it is pretty important because Bitcoin has had its highest dollar gain and percent gain in roughly 2 years. So if you go ahead and look at both of those candles, you'll notice Bitcoin did have a correction after both of those. So let's go ahead and go to the chart to see how big that correction was. Also, I do want y'all to know that this tweet did come out yesterday and Bitcoin has actually increased a little bit more than 25.9%. Let's go ahead and jump into that graph for y'all so you can see it. So we did actually close that candle at 27%, so no longer is this the highest weekly at 25. But we can still go ahead and see what it did correct down from there. And roughly we did see a 30% correction. Now, this candle right here is the one I believe they were talking about where Bitcoin did go up $7,000. And as you guys can tell, we did ultimately have a correction. Well, we can take this smaller correction first of 10% come the immediately candlestick after. But then we also had a correction of 50%. So I still think we are out of that bear market. I still think we are in the accumulation phase and turning into the bull market as we get closer and closer to that halving, which you can see here is expected in March 2024. So I would just be careful because I do see about 2 levels Bitcoin could go to, just like I've said before. I do think we could all the way go all the way up to 41,000 just to hit our head up in this level, and then stay in the range of 30 to 40 and kind of just bounce around in there, forming more volume, because in the range we are right now, from around 22 to 28, you notice there isn't much volume at all. I will actually go ahead and pull up the volume profile index for us, and you can see here that actually there isn't much volume in that range. Let me go ahead and bring it closer. So that's why I personally think we do need to form some more volume in this range, because as y'all know with VPVR, it likes to go to its peaks, and we ultimately did go down, crash right here, form that bottom, get a lot of volume so we can come back and ultimately bounce off before liftoff. So that's why I do think we could come back down and test that 24 level, maybe 25. And then once we do that, ultimately kick off to around that 33, which would be that next local peak. And then possibly going as high as 40, just because that's where a lot of that volume is, because it does magnetically shift to that area. So that's kind of that TA that I had for y'all. I do think it's also important to highlight one other kind of TAA line that you could add, and that's the 200 weekly moving average. So we did actually break through it like we were paying attention to after getting rejected in that video a week ago. But now that we've officially crashed through it, I am possibly looking for us to retrace, which is ironically enough around that 25, 24 range, to just test it. And once we do test it and we prove that we won't fall back below it, I think that will just be even more evidence that we will get to that range of 30 to 40. So if you guys enjoyed today's video, go ahead and drop a like below. But that's all I have for y'all today. I hope you enjoyed it, but stay safe out there. Bye-bye.